We start with President Trump and the markets. Seems like he's got the whole world, or at least the whole market, in his hands. The president is gearing up for trade talks with China at the G20 meeting with tougher rhetoric. He's thrown Apple into the mix this week with talks of smartphone tariffs. And now he is taking on General Motors over the company's job cuts and plant closures. Is President Trump the biggest threat to the market? And if so, how much damage could he actually cause? Guy?
I think he creates the most volatility for the market. I don't think he's the biggest threat to the market. I think there are other threats. I think Europe is a threat. Tim's pointed that out. I think a Fed that seems steadfast to continue to move, in my opinion, correctly so, is a threat. But I think what's happening with President Trump, and if you start to think about it, it's all about wins and losses. And he has said himself that the stock market is one of the things that he looks as a win. So this stock market that is now basically flat for the year, that's had a rough month and a half, one has to ask into year end, is he going to allow this market to go down? My sense is no. And I'm sort of reversing course a little bit because I don't think the Chinese are in a rush to make a deal. But you could come out of this weekend and have something to the lines of, we had very constructive talks with the Chinese. President Xi and I are great friends. We love each other very much. We have a path to move forward. And I think that might be enough to make the market go higher. I'll say this. The market should have been down today after all that Apple rhetoric yesterday. And the fact that it recovered as well as it did is somewhat encouraging.
Yeah, I mean, every time that we have a market that's down because of trade, all of a sudden a mysterious rumor comes out of the White House that things are going better than expected. So I think a lot of the fear of trade is priced into the market in the short term. We can talk about what the long-term effects are at a different time. But in the short term, the market's priced in a lot of fear. And to Guy's point, it would only take a little bit of positive news to get this market going. So I think just the opposite. The way the market's set up, the way things have sold out, and the way that the market's ignored other news, to me means one little bit of positive news coming out of the G20, and you could actually have a rally off the lows here.
Joker, and a triple, because I'm having trouble saying anything different than either of these guys. I think the market traded great today. I mean, the S&P ended up higher after a very strong move over the last couple of days, and in fact, we've had headlines that haven't been terribly trade constructive. I actually respect the White House. Larry Kudlow was out there saying, hey, look, this president's doing things that, 4 or 5 other administrations on both sides of the aisle have done nothing to go after. To me, that's digging in the heels. Whether, Apple's a trade war stock, which has been a topic, I don't think so. And GM as a company that's going to also, on some level, be part of the political process now, not too worried about that either. I think you had oversold conditions. The most important thing that happened today was Fed Vice Chair Clarida got out there and basically said, we might be closer to neutral than we thought. That's my interpretation, but my sense is that this is a Fed that is showing you that they might be a little bit more thoughtful on their aggressive side.
Some might take a look at, though, what President Trump and the administration is threatening GM and say, you know what, this had been a president that was regarded as a very pro-business kind of president, right?
Yeah.
And here we are. He's singling a company out. He says, I don't
He's been doing that for 2 years.
Except that this is the first time that he's actually said, we might pull something away from the company. We might actually take money back from the company that we don't.
His rhetoric, I think,
though,
Mel, we're seeing less and less reaction out of the actual words that come out from the president now. And now I think what we're seeing is, and by the way, I thought the interesting part of today was, we've talked about this for a while now, we haven't seen people come in to buy these down markets. We were down 150, 160 points right out of the gate this morning, and suddenly buyers stepped in. As a matter of fact, in the options world, we had some huge buys in the spiders and other individual names, including names, not Apple, but Microsoft and some of these names over the last couple of days. So I think it's a little encouraging that people are willing to say, you know what, I want to be back in the market. It seems to me like we're starting to finally see a little bit of that. Maybe not a lot, but we didn't see a huge spike in volatility either. Last Tuesday, we were at 23 VIX. You know where we were today? When the market was off 160, we were still under 20. And then we finished right around that 19 level, somewhere in there. So it tells me that, yes, there's still volatility in the market. Yes, we're getting some pretty extreme moves intraday. But the interesting thing is, for me today, was there were buyers when we were down.
So we're all pretty constructive on what's been going on, which means the exact opposite is really the danger here, right? So if you come out of the G20 meeting with absolutely no deal and, hey, we're going to raise tariffs, and then all of a sudden the Fed says, you know what, we're not done. The economy's ripping. We're going to raise.
But don't you feel the Fed from the Fed?
I don't think they're going to do it. Is what I'm saying.
I was going to say because what we heard today, the Fed basically they don't want to get politicized.
And we'll hear Powell tomorrow.
Yeah, and they didn't want to be put into a corner, but they are. I mean, What do we all think and know is going to happen in December?
Right. That's why I'm saying
going to be that.
if for some reason, which I think is a low probability.
I think they're going to raise it one quarter,
no matter what.
And then they go back to the whole idea of, hey, we're a daddy dependent.
Right.
You know, we're seeing some slowdown and all the rest of that.
That's the dovish hike scenario, which I think is the most
Yeah.
probable one. If they come out and say anything different, though, then you have to run for the hills.
But the trade thing is interesting because if they come out and say nothing, I mean, has the market actually risen thinking that they're going to say something? Because then I would say that if they come out and say
On
nothing,
trade.
then
Sorry.
on trade,
Not the
specifically
Fed.
on G20, then nothing happens with the markets. It's sort of like that.
If they don't, but my point is, I have to believe that President Trump is laser focused on the stock market. He himself has said that it is a report card for the administration. I can't believe they will allow this to continue much longer. And if he can come out, even if nothing's been agreed to, if he comes out and just says again, you know, President Xi and I have a great relationship, we're great friends, we think the world of each other, we have a path to move forward, that might be enough to get this market higher.
I think also, you know, let's not forget, we had a historic Cyber Monday. We've had actually excellent holiday sales. We've been reminded that the consumer is in very good shape, leaving aside the jobs that are lost in a couple plants at GM. And I don't mean to be insensitive to those job losses. I'm sure they're tragic for those families. But the bottom line is people are employed and people are making more money in this economy than they have in a long time. Inflation is not run away. You've actually gotten some relief from energy prices. And this is a backdrop that actually right now sets you in a different mindset for a market that was very oversold. And I think, frankly, stocks had given up a lot.
I feel like the sales though, that we're seeing is a little bit rearview mirror in that all of the sales that are being made are on inventory that was brought in prior to the impact of the tariffs. We do not have any impact of the tariffs whatsoever on any of the goods that are being bought right now because it was pulled forward. So when there is a price increase because of the tariffs, if there is going to be price increases out there for the tariffs, how will that impact consumer sentiment and sales?
And that's what I think when I say that we saw all sorts of paper and people actually coming in to buy today, Mel, I think people are really playing this G20, figuring something positive will come out of it. That's the short term. I've never seen this.
How binary were those bets?
Oh, unbelievable. I mean, I'm talking 1 week out, 2 week out type options, which when you consider it, what are they playing for? They're playing for the G20.